What's going on, YouTube? Today is day number 4 of the $1,000 account challenge, and today I am up a whopping $6.84, or 0.63% of the total portfolio balance. What happened? Well, it was a red day. I wound up taking 2 trades. It was a red day that started us off, that then flipped to a green day. So we actually worked our way from being down on the day to being up on the day, and of course that loss cut into the profits. I'm going to explain the trades to you, but first I want to give a shout out to everybody here in the announcements channel. I took a poll after we conducted the live trading. I said, how'd you do today? Red, green, or no trades? 163 of you, well, 162 minus me, of you voted that you had a green day, while only 19 of you said that you had a red day. This is fantastic. I love seeing these majority green days, and not just majority members are green. Like, you are blowing out the red days, red members by far. Like, there's a huge margin here between the members that are green and the members that are red. So big shout out to everybody that was green on the day. And going through the profits channel, you know, seeing some of you even post these smaller gains with me, I mean, it adds up, right? It's still a green day overall, and we're going to keep chugging along with it. But yeah, I mean, just big congrats to everybody here that was green. So remember, in the beginning, it's not so much about the money that's made or the money that's lost. It's more so about the process, right? How are you conducting the trades? Are you cutting when you're supposed to? Are you taking profits when you're supposed to? Are you managing your risk properly? All that good stuff. So trade number 1 was Tesla, and this resulted in a loss, which I'm not that happy about. But straight off the day trade watch list, we had a great long trigger here for Tesla, long above $237. Okay, so we'll pull it up on the big chart. Tesla long above 237, and that's way down here at 237, and the stock runs to 246. So almost a $10 run from the trigger level that's set. What happened? Well, we get the initial run up. Okay, so we're not trading in the first 5 minutes. The stock goes from red because it gapped down. So it goes from red to green, breaks above the PDC, breaks above the trigger level, and pulls back. Now, at this time, I'm looking at this run as an extended run up. So I'm thinking that because the run here is so grand, the pullback might be a little larger. And so that's my reasoning for not taking this first dip entry down to $237. Normally, I would have taken this entry and I would have said, I'm going to take the entry here and add to the position down here if it continues to drop. But because I'm in the beginning of this $1,000 account challenge, I don't want to put so much capital into one trade. I don't want to over leverage myself. So I wound up staying patient. I missed this dip entry for that reason, thinking it's going to dip further. I'm staying patient here, right? And we do get the pop up into the high of day and then the pullback and then into the consolidation. Now at this time, I'm recognizing, okay, it validates the long trigger here as a point of support. It does give us a high of day. It pulls back. It puts in a higher low, and it starts to consolidate into a formation that I know as a bull pennant pattern. And typically on these bull pennant patterns, when the stock comes to a point of the pattern, you get a move up that breaks out of the pattern into the high of day, or you get a move down that breaks down from the pattern and retraces a little bit. So what we get after taking our entry is a move up, and I was up 10% on this trade, but I'm thinking it's going to give us this breakout move here, right? So I'm holding, I'm not taking my profits, and then it retraces. So not only do I go from being up 10% to break even, but then I go to being down 10%. And this is why I made the decision to cut, because I did not think that it was going, I looked at this as a fake out, right? Like it was going to break out. Nope, it's going to break down. And so I cut the position at 10% here because I thought it was not going to hold the trigger level at 237 as support, and I thought it was going to dip further. That's not the case. It bounces right back off of 237 into the consolidation, and then SPY gets a positive news catalyst, and then this thing's just running for the rest of the day. So unfortunate, right? Missed opportunity there on Tesla. Had we held through this little pullback here, we could have gotten, you know, a piece of this. But in hindsight, we also don't know that this pop move is going to happen, and we don't know that it's going to hold the trigger level as support. Even when we took our entry, we did not know that this was not going to give us a continue. You know, this could have broke out in a high of day, and everybody would have been happy. Or at least I would have been happy, right, taking those profits. So that's why I missed the initial entry here, just not trusting this first pullback, thought it was going to pull back further. Why I took the second entry here, why I took my entry here, because I thought it was a pennant pattern that was going to break out. And then why I closed it here, because I thought the pennant pattern had faked out and we were going to get a move lower. Now, could I have executed this trade better? Potentially. You know, initially my thought process was to go long at 237 on a dip to 237, but when I saw this pennant pattern shape up here, I really did not think that it was going to pull back if it broke out. Like if that thing pressed in a high of day and we got this move here, I mean, you could see it, right? It never pulled back after doing that. This is what I didn't want to miss, and that's why I took my entry there when I did. So hindsight, could I have taken the entry over here closer to 237? Yes. But, man, I mean, like I said, in real time, when you're seeing this pennant pattern breaking down, it's tough to say that that's going to reverse and give you that breakout move. So Tesla, first trade of the day, traded live with the team, resulted in a 10% loss, and that's what put us initially red on the day. Then we switched focus. We went over to SPY. Okay, so we said Tesla doing its thing. We got the breakout move on Tesla, right? It's too far extended. We're not going to trade that. Also at that time, NVIDIA and Google both had already ran, so we're missing opportunities there. And so we switched focus to SPY because SPY actually, after running initially, gives us a pullback. And so we're going to talk about that. We get a opening chop and consolidation here, but then a positive reaction to a news catalyst that, look at this volume on this candle, that sends this thing flying. Look at this volume here. Sends this thing flying into high of day all the way up to the long trigger at 457. So SPY today, long idea above 457, yet I take the entries prior to the trigger level break. Why? And this is the part that you need to focus on. Why would I do this, right? This is the process here. The reason why is because we have a positive news catalyst. Positive news catalyst serves as something that can directionally make a stock move. So when we get this pop move up and the run to 457 and then the rejection at 457, I don't want to miss this move. I don't want what happened to us on Tesla where this thing broke out and just kept running. I don't want that to happen on SPY and us miss the move. So what I do here is I take my entry on the first available dip that's offered, but I do so with a smaller amount of capital. And I do that to mitigate my risk because at this point during this entry, there's no guarantee that this is going to bounce from here and run back to the high of day. It could happen. That's why we took the entry, but there's no guarantee that it will. That's why we mitigated our risk with small size. So my plan here was to take the initial entry long on a dip with smaller size and afford myself enough capital down the road to scale into this trade. I've made videos about scaling into trades before. How to properly scale into a trade is the title of that video. Go watch it if you have some time, if you want to learn more about it. But what I was looking at was this has potential to pull all the way back to this previous high of day. So if the stock is to continue up from here, it should make higher lows, right, which it's doing here by respecting this trend line, but also not break back below previous resistance, understanding that old resistance here can become new support here. This is my risk off level. So when we get the pull, so initial entry taken there, and when we get the pullback down to this price point, we scale into the trade here on this candle. So we are effectively taking our cost basis and lowering it from our entry up here down to somewhere in the middle of our first entry and our second entry. So this does something for our cost basis to where, you know, when we get the bounce up, we are able to take our profits when they're offered. So lowering that cost basis, really effective for us here. It took some patience. We get the consolidation. My stop loss was placed literally just below this recent low. If this thing continued to dip, we're going to cut it. So the amount of risk assumed here, let's just say from the mid-entry, amount of risk from the mid-entry down to the stop loss look like that. The amount of potential reward from the mid-entry up to the high of day look like that. So your reward here amount is much greater than the amount of risk assumed, and that's what made this trade worth taking, especially since it was prior to the trigger level break. Now we get the run up to the previous day's closing price, and I took my profits there at about 15% gain because it was at the previous day's closing price and we were near the high of day, right? The prior high of day. So PDC on a gap down day and that's what we had on SPY, right? So we closed over here, up here yesterday. We gapped down this morning. Your previous day's closing price is always going to be a potential level of resistance, as well as your intraday high. Your high of day is always going to be a potential level of resistance as well. So to take profits when they're offered at 15% here was the right decision, because I think if we did not take those profits there, we would probably be cutting the trade for a loss as it retraced back down here. Now, there's one more thing to be mentioned. I was done trading for the day, running a Q&A session, done trading for the day. But one more thing to be mentioned, as SPY was consolidating here, other than this dip down, it looked like to me that is a proper ascending triangle formation. And so during the live trading, I did mention watch SPY as it's breaking right here, as it's breaking above the previous day's closing price and giving you the high of day. Watch that for a potential long idea. And sure enough, you get the high of day, the pullback, hold of the previous day's close as support. So this would have been a potential dip entry, or even up here for the run up even higher into the high of day. So a couple of different ways you could have traded that. I did not take this trade over here. Reason being is because I was already green on the day after being red on the day, and I didn't want to take on any more risk. Plus, I was answering questions in the Q&A. So that's my breakdown of the two trades that I took. A small green day here, just off the profits channel. $6 overall, small green day, but green nonetheless. At least it's not a red day. Started off as a red day. We came back from that and was able to print green. All right, that's it for this video. So a couple of takeaways for you: scaling in, how to properly scale in, and how to use positive news catalyst as a reason to maybe bend the rules a little bit, take the entry prior to the trigger level break. And then I would even go a step further and say on the Tesla trade, just cutting the trade when it didn't work, the moment that it didn't work. I mean, even though it did work afterwards, that's all hindsight, right? We didn't know that was going to happen. So to cut this the moment that the trade doesn't work, I think was the right choice in the moment, because there was no guarantee that was going to bounce there. It could have fell all the way down to here, and next thing we know, we're down 30-40%. So something to take away from that too as well. Okay, press the like button for me if you haven't done so already, if the video has helped you out in any way, shape, or form, and subscribe to the channel if you haven't done so already. I post these trade reviews. I plan to post these trade reviews for hopefully every day of the account challenge, so that you get an idea of how I trade, how I take my entries, and how I gauge my risk amount versus my potential reward amount. Take care. Thank you for watching, and enjoy the rest of your day. Cheers.